when I look at seasonality and I look at I look at stocks are painting a very interesting picture as we go into the back half of August and into September. But when you look at ETFs, we're going in at 73% bullish and we're going out at 78% bullish. But I want to let you know something. This does not tell you the full picture. When you see bullishness in the market, and UUP happens to be one of those numbers, those ETFs that are bullish, that's pushing against the stock market. That's pushing against commodities. And when you see what I'm seeing this week, UUP is still here. UUP has been around now and been hanging around for quite some time. US dollar. Look at it again. When you see, when I see 13 total trades, 13 total positions, that means there's 13 days here and there where we're seeing bullishness. It doesn't mean if you miss UUP today, it's over. It's saying going backwards and forwards, there's a lot of clumping going on in the month of August. We're going from August to November, from August to the end of October, from August to the beginning of November, that the US dollar rallies. Okay. Could it be because we're going into midterms? Not necessarily. Midterms only happen when? Once every 4 years. This has historically happened to every single year for the last 10 years where the US dollar has gone higher between now and end of October, beginning of November. Okay, so I want you to keep an eye on that. We talked about it last week. We talked about it 2 weeks ago. What have we not talked about? We haven't talked about FXE. Let's talk about FXE for a moment. So FXE is the red line you see here. All right. Some overall details of FXE. It too has positions that are between now and going out to the beginning of November. It too is a 56-day historical trading opportunity. Right. It too has a small return. Okay. To the downside. The red means that this FXE is historically bearish. What is FXE? And it too also has a positive power meter. And it too has happened 10 of the last 10 years. It's actually gone lower. FXE is the financial currency shares euro dollar. Okay. So the currency shares euro dollar ETF, if it's going lower against what? Against the US dollar, which is going higher. It's confirming what we've been talking about a couple weeks ago. If the US dollar is going higher, it's going higher against a basket of foreign currencies, one of them being the euro. So the euro is showing the last 10 years that it has averaged about 1.35, almost 1.35% between now and the end of October to the beginning of November. But look at the pattern that it's had in the last 10 years. Yes, these are low numbers you see, 1.29, 3.28, 1.69. But this right here, folks, is the euro dollar. It is a way of trading the euro. It's a way of trading the euro in a form of what's called currency shares, which means you could trade it in your equity account, right? And so now that I know this, and I'm looking at this, historically bearish between now to November? Absolutely. You know what else is happening? The pattern's getting better. In fact, the last 5 years, the pattern has done so much better than the first 5 years. It's practically doubled its move just in the last 5 years. Now, you might say, but Tom, 1.35% on average isn't much. In fact, when you look at the power meter, you could factor in that it might move 2%. That's not much, but that's a lot when it comes to the power of the currency itself. A 2% move is huge, right? So it's happened 10 years in a row, just like the US dollar has been happening 10 years in a row. This is one that you trade to the downside. Let's take a look at the chart. The chart agrees that not only does the seasonality they're showing and the technicals are showing, but I put something else on the screen for everybody to see too. This is the Elliott wave forecast for FXE, all right, currency share euros. And you can see that we're in a wave pattern that's going to the downside. The last big down move was from May into the end of June, where we saw the euro move, this ETF go from just below 109 down to around close to 104. We have since then rallied to near 107, right? Elliott Wave has us going down to the below 104 to 103. And it's showing that can happen by mid-October, which comes in just a couple weeks earlier than what we see with the pattern that ends end of October to beginning of November. So I wanted to pair all of this up with you and show you seasonally what's going on with the euro and foreign currencies as a whole. And more importantly, that it's pairing up with other indicators right now, moving in the same direction. Spot the opportunity, okay? So in a summary, August is leading higher, all right, for interest rates in the U.S. dollar. That's the seasonal aspect. Can the U.S. dollar and can interest rates and the stock market all move in the same direction? Yes, they can. We've seen it happen. Does it last forever? No. Eventually, the rails come off of one or the other. Keep that in mind. But when we do see higher rates and we do see higher U.S. dollar, that means we see the opposite for foreign currencies like FXE, okay? And then finally, we've got interest rates that are lower than average, or IV rates, lower than average. IV, what is IV? IV is implied volatility. So when you look at the options are fairly priced. And it suggests that for those of you option traders, you might want to look at puts.